You will likely sell more umbrellas during the rainy season. You might sell more Christmas trees during the festive season. More face masks were sold during the COVID season than in every other season. What is the point I'm trying to drive at here? Every business person knows the principle of times and season in business, and every business has good time to buy and good time to sell. And the summary of every business is to buy your products cheap and sell them at high price. So buy low, sell high. That is the summary of every business. And that is applicable as well in Forex trading. So you definitely know there will be a time to buy or sell specific currency. So how do you determine when to buy or sell a currency? In Forex, traders use analysis for this. So just like you analyze previous data, during the rainy season, you likely sell more umbrellas. By looking back in time and looking at the umbrella sales increase, the statistics of umbrella sales, you use that to determine that's fine. If a new rainy season is coming, I'm going to stock up umbrellas in my shop so I'll get more sales. Forex traders do the same thing. They look back in time and analyze the market back in time and use that to determine a course of action for the future. Now, there are two major forms of analysis, two very popular forms of analysis. One is technical analysis and the other one is fundamental analysis. When we talk about technical analysis, it is the form of analysis that involves examining past market data, mainly price, and they use this previous market data to anticipate future price movement. So it's just like a farmer observing past weather patterns to know when is the best time to plant. I want to plant maybe around the rainy season so the crops will be properly watered. And this typically is example of technical analysis. You see all the technical analysis work. Most of the jobs are done on charts like this. So for example, this is MetaTrader 5 chart. There are different ways of trading technical analysis. Some people trade trend following patterns. Maybe they just use trend lines to measure what is the trend, what is the direction of the trend. You see them analyzing something like this. They draw trend lines. Other people, they trade price pattern, head and shoulder, this and that. Other people, they trade price channel. Then for others, they also make use of indicators. They add indicators to the charts to be able to carry out their method of technical analysis. Inherently, no form of analysis is bad or good. They all have their probabilities of winning and losing. There is no perfect form of technical analysis. Then, the second form of analysis, the fundamental analysis. So we just talked about technical analysis. Most cases, you see Forex traders referring to it as TA. I trade TA. And then for fundamental analysis, you see traders referring to them as FA. Now, what is the summary of fundamental analysis? So fundamental analysis is the form of approach that uses economic, financial, and other qualitative and quantitative factors relating to the economy to determine the currency's value and how whatever economic activity will affect the currency valuation. In this case, instead of looking at maybe previous prices and times and season to determine what you expect this season as a business owner, this one is more like considering factors like supplier's price, consumer demand, and other economic factors, maybe cost of transportation increasing. So these are fundamental events that might impact your business. So fundamental analysis analyzes fundamental events that might impact the business, while technical analysis deal on previous price patterns to forecast future anticipation. This website I'm in is forexfactory.com. This we call economic calendar. So from an economic calendar, you see every activity, every fundamental activity happening in the Forex market overall, and you might research more on them to see how they will impact the economy to determine when to trade. You see the precise timing of when the event is going to be released, and you click on these folders to see the impact of the event. So just like technical analysis, there is no perfect form of analysis that can guarantee you 100% win every single time. So trading is speculation. Forex trading is speculation. There is no certainty with any form of analysis. There is no 100% certainty with any form of analysis. So, method of analysis being deciphered. Now let us move to types of trader, how traders approach the market. So some traders, they prefer to go into the market, make numerous trades through the day, aim for minor profits, and come out. So they like to engage in the market regularly, take series of trades through the day. This form of traders fall under the category of scalpers. So traders who trade within the day, take series of positions, they fall under the category of scalpers. And there is another category of traders, day traders. This category of traders, they open and close their trades within the same day. They avoid holding positions overnight, but they spend more time holding their positions than the scalper. So scalper can get into a position and exit in 1 minute, 2 minutes, 3 minutes, look for another trading opportunity, trade again. But for the day traders, they trade and hold their position probably through the day, through the whole day. And then we also have swing traders. The swing traders, they hold their position for a longer time, could be weeks, months, even years. So most people who trade cryptos are example of swing traders. You don't buy BTC today and expect it to go to the moon today. So most times they hold it 1 month, 2 months, 3 months. Diamond hands, they hold for years. So those are examples of swing traders. So they hold their position for extended duration. They don't get into a lot of position, but the one they get into, they hold it. Now, which form of traders are the best? I cannot tell you to a certainty that scalpers are better than swing traders or swing traders are better than day traders, because every trader tends to gravitate towards their own personality in trading, toward their own time, and towards their knowledge, how they prefer to approach their trading business. So for this, we have to understand performance statistics of different traders, because understanding the realities of trading will help you to set appropriate expectation as you are looking forward to getting into this business. So according to statistics, the study suggests that large portion of retail traders are not profitable. Large portion of retail traders are losing businessmen and women. That means they don't make money from trading. And this number is even up to or more than 80% of the entire participants. So over 80% of Forex traders, they don't make money. They don't make money. That means they lose money. They are not profitable overall. Is this supposed to be something discouraging to you? No, because various studies also suggest that most people don't spend enough time taking Forex as a career. So look at whatever career you might be in. Let's say maybe you're a graduate, you went to the university, the course you studied, you might have spent like minimum of 4 years. And how many years? Now calculate how long it took you to school from inception, from your primary days down to your point of graduation. You see how many years you spent in the educational system. You graduate from school and even find yourself not working in the field of what you studied. That means you spent over 16 years in the educational system and still probably not using it as the knowledge of your major source of income. Then you still see people who learn a trade. Let's say they learn a skill. You barely see people who learn a skill and the same month they start making money from that skill. But then when people come into the Forex market, they want to learn how to trade. In fact, most people who come into the Forex market, they say, I'm looking for a side business that I can be investing in and be giving me small money. That is the concept they come into the market with most of the time. But that is not necessarily a good concept. Forex is a business, and it is not a business that is going to pay you from the day you start. You're not going to learn a form of analysis because you learn ICT or trend lines or whatever. That is not going to make you profitable the same month, even the same year for some people, even couple of years for others. So the time to profitability, first, for you to be profitable, you have to be consistent in your actions, in your risk management, in how you manage the business. So your profitability, one, will be determined by your consistency. And your time to profitability can vary. For some people, it will take them longer time. For others, it will take them shorter time. And it still depends on your influence in the forex space. Who are you listening to? Who are you learning from? And all of those. And how you yourself are participating. So the more engaged you are, the faster you will learn in this space. There is nothing you will learn from the sidelines that is going to make you come into the market and become a perfect trader. So you learn and improve as you go. So to recap it, we talked about setting realistic expectations, knowing the business you're trying to get into, and how we engage in the business. We use technical analysis or fundamental analysis to analyze price. We'll be able to make decisions in relationship to knowing when to buy or sell a currency.